Hey everybody, Brian Shannon here from alphatrends.net. Today's Friday, the 29th of August, 2014, and we've got a long weekend coming up here, so I hope you enjoy that. But let's get down to taking a look at the markets. We had another great week for equities here. You can see all of these indices were higher. And, you know, the interesting thing is that we heard, at the beginning of the summer, you always hear it, sell in May and go away. Well, this year, since Memorial Day, this is the percentage movement that we've seen in the markets. The S&P 500 up 5.5%. Nasdaq got the majority of its gains this year during that period, up 11%. And semiconductors up 13%. Across the board, equities did great over the summer, and hopefully you participated by not listening to the little quips and quotes, but instead listening to the price action. It has been volatile, of course, but we finished out with a great month. S&P 500 up 4%. Nasdaq up 5%, Russell 2000 right in there, the pack too, almost 5%, semis up 6%. So really just a great summer for equities. Let's take a look at the action here. The S&P 500 last week, as we noted, the market's getting stretched. It's still a little stretched here, but we're at all-time highs. Once again today even, we closed at another all-time high with this 57-cent gain, and this market continues to follow the path of least resistance and run over bears who are foolish enough to step in front of the momentum. We still have a rising 5-day moving average, and the market this week corrected a little bit through time rather than a strong price pullback. We did see a dip below the 5-day moving average, but what we didn't see is more important. What we didn't see was the 5-day moving average act as resistance, and then the market turned lower from there. Instead, we saw a slight pullback, which I'm sure sucked in more short sellers, and then we broke back above this prior support, which had been very short term, been in a little bit of resistance here this week, and tested the patience of some of the less patient bulls, I guess. The key for next week will be about this 199.35. If we break below that and hold below it for more than a half hour or so, then perhaps we get a little bit steeper correction and pull back down towards these prior 198 to 198 and a half. Really would be the area that we would expect to see that buyers would once again step in and hold as support. Not that you would want to buy on a pullback. We don't buy on pullbacks because we don't know where they're going to end up pulling back. Instead, we wait patiently for that pattern of higher highs and higher lows above a rising 5-day moving average. So going into next week, we're kind of in the same position as last week. We have zero evidence that this market is topping out. We just simply have a market that's making higher highs and higher lows and pauses through time. If we break that 198.935, then perhaps we get a little bit of a pullback, but again, zero evidence. Same is true for the Nasdaq. The Nasdaq very briefly dipped below that 5-day moving average. The 5-day moving average still has an upward slope to it, and we're closing in on that $100 level. But we finished right at the highs for the week here. So again, a great week for all of these markets. If we see that the 99 and a quarter, 99, let's just call it, I guess it's about 99.10 was low this week. If we see that break and hold below it for more than a half hour, then perhaps we get a little bit deeper correction. That would get us below that 10-day moving average as well. And when I say a deeper correction, perhaps down towards the 98 level. But again, there's zero evidence of that. What we have to do is manage risk on an individual basis, stock by stock. You don't trade Twitter based on what Nasdaq is doing. You don't trade Nasdaq based on what Facebook is doing or any of those other things. Trade what you're trading. Manage risk on the individual trade. It's a big mistake that I talk about constantly that people make, which is to extrapolate the market averages with what their individual stock should do. Now, we've got a couple trend lines in the Russell 2000 that are significant here. The first one is since middle of August, and we've got this little trend line here that kind of ties in with this prior little area of resistance, and that resistance has been tested as support a couple times here recently at 115.50, let's call it. So if we break below 115.50, perhaps we see a little bit deeper pullback. As you know, we've had our eye on the volume weighted average price year to date in here, and that's down at 114.10 area, but we've also got that 50-day moving average, which is now now at about 115. So I think that 115 is really going to be where, if this market pulls back, we see the buyers step back in. It's this longer term trend line since the beginning of August, and also the 50-day moving average. So it makes sense that if we break below 115.50, that 115 would be the likely area that the buyers do step back in and try to regain control of the market. But again, we've got an intermediate term uptrend with a rising 5-day moving average. It hasn't been as nice and neat holding above the 5-day moving average the way the S&P 500 or the Nasdaq has, but clearly the Russell 2000 is behaving much better than what people had feared for it. And again, you can't trade the Nasdaq based on what the Russell 2000 is doing. You can't trade the Russell 2000 based on what semiconductors are doing, etc. over and over again. You have to look at it and say, semiconductors, they pulled back a little bit this week, found some buyers at about $50.75. That's going to be a more important level going forward next week. We had a slight pause through time and then back to new highs once again for the year and for the last several years. So when we look at these semiconductors, what we'll want to see as our first potential support area would be about 51.20. Below that, the more important level of $50.75. So even if we break below the 5-day moving average and we test this level, as long as support holds, we're still in an uptrend, and an uptrend is defined by higher highs and higher lows. So it's foolish to sell short while we have a pattern of higher highs and higher lows. Now for the financials, 23.10 to 23.20 should be our more important level of support in here, and this market's been riding this 5-day moving average just beautifully as well. We had a slight pullback this week and didn't come quite down to the prior resistance, but we've got an important level to measure this strength against next week, and that's what is important for next week, 23.10 to 23.20. This is kind of where the light turns from green to yellow in here. It doesn't turn red, it goes from green to yellow. Now the shares of Apple last week, I had suggested that breaking back below 101, I thought maybe we would see a little bit of a correction, and we did get below that 101, but it quickly ran back higher. At Alpha Trends, we got stopped out of our swing trade right around this 101 area, and it was a great trade, but it's just a trade, and Apple will set up for us once again. So if you're currently in it, I would think that the lows for this week will be important going forward for the next few days. Now, to follow up on some of the other stocks that I'd mentioned on Twitter, on Yahoo and on Twitter actually, the biotech index, we spoke about this cup and handle pattern in here, and this is where I had mentioned it in Yahoo, saying that I thought that it's still bullish. Last week it looked like we were getting a little bit of a time correction in here, and we blasted significantly higher this week. So since that call, that kind of said, where Janet Yellen said that biotechs were overvalued in social media, we've seen these markets continue to rally. You can't trade stocks based on what Janet Yellen says about a stock. That's not her job. Our job as traders is to listen to the message of the market. You want to listen to what the Federal Reserve Chairwoman says, of course, but if price evidence doesn't support what she says, then it's meaningless. It just means absolutely nothing until we see the markets break down. And we're seeing that we had a little bit of a pullback that briefly got below that 5-day moving average a week ago, and now we're back above it with higher highs and higher lows once again for the biotech. So they remain a very strong group, up at all-time highs. Every time you see things like this happen, people are still telling me that this is the top, it's a double top, whatever. And I did a post recently about, please don't call this a double top on the S&P 500. That's not what it is. Go back to alphatrends.net to find that post from a week or so ago. Back to Twitter, though. Twitter's been a great trade as well. We made a lot of a lot of people actually got involved based on the call that breaking above the volume weighted average price year to date at 45.50. It's had great follow through from a week ago, and Twitter continues to show a beautiful pattern of higher highs and higher lows above a rising 5-day moving average. At this point, I'm going to say it's up to you to decide where your stop goes. We've got higher highs and higher lows in here, so you have to choose the one that makes the most sense for you based on your time frame. It's got a great start. If you bought bought it above that volume weighted average price since they came public, and you lose money on it, then you're in my mind you're a fool for letting it come back all the way. But we all have our own different method of getting involved. This was the buy point. If it drops all the way back down there and you lose money, again, to me that's just not smart trading. But Twitter is well on its way. Hopefully you're involved in it. Zeltique got moving a little bit this week as well. It broke a little resistance near that 20 and a half level, and it's above a rising 5-day moving average. I'd say that if you're in this one from the mention at about $20 a share, then again, it'd be foolish to lose money on it. Worst case stop, I would say, if you're still involved, at about 20 and a quarter. Crocs didn't trigger here. The stock is, it's still below the volume weighted average price since the event. The event being, of course, this level since the earnings, and that's up at about 16 and a dime. Now it's on the 50-day moving average. It looks like an area where it should find support, but it's just been bleeding off slowly. Now I did mention that maybe a starter position, a small starter position, could be taken above this level this week, but in Alpha Trends we did that and got stopped out with a small loss here. But there's no reason to be looking at this from a longer term perspective as something that should be bought until it can breach that volume weighted average price since the event, and that's at about $16.10 right now. Let's take a look at bonds. Bonds continue to move higher here. Great week for them. That of course puts the 10-year yield down at new lows as well, yielding 234. So back to the TLT. This is the 10-year bond. It's in a phenomenal uptrend. It found some resistance here where it caught its breath, and now this trend continues to move higher. We keep hearing about how bonds can't continue to move higher because the Fed is going to change their monetary policy, but bonds keep going higher. Don't listen to the news. The news is noise. Listen to stock prices, listen to bond prices, listen to what actually matters. Only price pays, and they continue to move higher. Gold, again, gold was the one group that was down since Memorial Day, down 0.5%. It gained a little bit of a ground back this week, but still clearly in my mind just a complete waste of time here, as gold is really just more neutral in here. Again, if they don't scare you out, they'll typically wear you out. We've got a longer term market where it's looking for support, but no reason to be a buyer. It's good also to see that the volatility index is still down near these lows as well, and continues to confuse people who say that the volatility is too low, that means the market has to correct. The market doesn't have to do anything. Our job, as always, is to listen to the messages of the market. That's what I provide for subscribers to Alpha Trends each and every day, is to provide the low risk, high probability stock trading setups and look at those on an individual basis, with risk management being job number one. So I invite you to take a trial to it and see for yourself if it's something that can help make you money and educate you at the same time. Enjoy a long and safe weekend. I will talk to you next week. Thanks.